This is how we're told you can become successful. Go to school and get a good degree, that way you can qualify for a good job. When you get that good job, work really hard, that way you can climb up the corporate ladder while you're working to save a little bit of money. That way one day you can hopefully retire and be successful. This path worked for a long time, but it doesn't work the way that it used to. This is why you have so many people with college degrees, masters, PhDs, and doctorates that are living broke, paycheck to paycheck. While on the other hand, you have some 8-year-olds making millions of dollars a year making YouTube videos. Seems a little strange, doesn't it? No, the solution is not to go out and make YouTube videos, although having a big YouTube channel is not gonna hurt. But you do need to get out of the middle class cycle of just working to pay your bills, and getting another degree is not gonna get you there. When you're solely reliant on your W-2 salary from your job, you have only one income stream, which means if you get sick and you can't work anymore, if you get fired from your company, or if your company goes out of business, well, now you no longer have an income stream. Your expenses don't go away. You still gotta pay for your house, you still gotta pay for your car, you still gotta pay for your kids, you still gotta pay for your food, but the money has stopped coming in. Number two, your salary is generally capped. For many companies, not all, you're capped by whatever your salary is, and there's a limit to how much your salary is going to grow. Chances are you're not going to see your salary grow from $70,000 a year to $250,000 a year, although it can for some people. For most people, it's just not going to happen. And number three, you're going to pay the highest taxes. As a licensed attorney, who's not your attorney, I can tell you that our tax code is designed to reward investors, but employees are paying the highest price, because as an employee, you pay what's called ordinary tax rates, which means you pay the highest tax rates and you get the lowest tax breaks. As an investor, you qualify for lower tax rates and bigger tax breaks. Now, hear what I'm saying very carefully. This does not mean it's bad to work a job. This does not mean it's bad to be an employee. This does not mean that your degree was necessarily a waste, unless you got a degree in Western European dance. But conquering the educational part of your career does not mean you're gonna conquer the financial part of your career. And this is very difficult, especially for smart people who've gotten great degrees, especially graduate degrees, professional degrees, master degrees, PhD degrees, to now grasp that there's more education beyond just a degree when it comes to becoming financially successful. And there are three problems that I've seen these smart people now struggle with when you now try to become financially successful. Problem number one is, I'm too busy. You're a surgeon, you gotta see patients, you're an attorney, you're an accountant. You have this amazing job, and now you gotta work a lot because, well, you worked really hard to get this degree. How are you going to have the time to learn how to invest? How are you going to learn the time on how to manage your investments? Problem number two is taking on more risk becomes a whole lot more difficult. When you go to law school, you have risk, but the risk is generally low because you know that if you study hard, get good grades, you probably will pass the bar exam, and then you'll have a job waiting for you at the end. There's still risk, but the risk is relatively low. And I can tell you this as an attorney who's not your attorney. When I go out and I invest my money, it's a very different level of risk because now the company I invest in could go bankrupt. I can tell you this because I've invested in companies that have gone bankrupt. Much more risk when it comes to investing your money versus when you go out and try to get a job from your degree. And then you have some people that are too smart. They're too proud that, oh, somebody like me with my PhD, my doctorate, my degree, whatever it is, I don't need to go out and do this financial stuff because I am smart, I'm educated, so that's beyond me. Now, this isn't everybody, but there are some people out there like this that I have met in person that will never become investors just because, well, their pride gets in the way. But being smart doesn't cut it anymore. Maybe it worked 20, 30, 40 years ago. It doesn't work in today's economy. You have to do something different, and that thing is the financial education, because we're taught to use your job, but your job is your labor. The way the wealth is built in America is through ownership. What are you working to own? Assets. What does that mean? You need to take the salary from your job and you need to invest that money into these assets. Let me show you. Let me give you one of the most common examples that I come across from high earning smart people. Me and my wife are doctors. We make something like $350,000 a year, and we have nothing to show for it. And the reason why is, now that we make this big salary, before we go out and spend any money, the first thing that happens is we have a very big tax bill. Now, depending on where you live, you're gonna pay more or less in taxes, but let's assume that you're in a fairly low tax state. Now you're gonna pay about $120,000 in taxes, which means you, after paying your taxes, are gonna be left with around $230,000 left. Still a lot of money, but not as much as pre-tax. Now let's have some fun. $230,000 a year is about $19,000 a month, and now you got your expenses. The first expense, we'll call it your mortgage. This will be about $7,000 a year because your bank says that you can qualify for a big mansion. Now, you were a little conservative. You didn't go as big as you could have gotten, but you got a $7,000 mortgage that you have to pay for. Then you have to pay for all your other housing costs, your property taxes, your insurance, your maintenance, your upgrades. Let's call that a simple $3,000 a month. Then you have to pay for your cars. You got an Escalade and a Range Rover like every other doctor friend that you have, because if you're a doctor, you got to look the part, and your husband and your wife have to look like your doctors. So now let's just call it $2,000 a month on your car payments. And now you got to feed your family. This is going to be around $3,000 a month, and you're going to say that's a lot of money in food. Well, don't forget now, when you're a doctor, well, you might not have the time to make your own food. Maybe you got to pay for a chef. Maybe you're going out to eat a lot. And if you're going out to eat, you want to go to the nicer restaurants. It's very easy now, as you start to make more money, to spend money at nicer places. And then you got to pay some money on your travel too. So let's call it just $2,000 a month on travel expenses, because you're going to go on a few big trips a year, maybe a couple small ones. And then of course you got to have some nice stuff because you're a doctor. Maybe you got to buy some nice clothes, some nice jewelry, some nice things to show off that, you know, you worked very hard in medical school. This might be an additional $2,000 a month to show off those gifts. This is a very bare bones look at what your expenses might look like, which means now you make $19,000 a month after taxes, but now you are broke. In fact, you might even be a little bit more than broke, because sometimes you have some extra costs that come up. Maybe your car needs some extra maintenance. Maybe your kid wants to go to a private school. Maybe you want to finish a basement, and now all of a sudden you have these extra costs that, sure, you could pay for it, but you just don't have the money right now, so you just finance those expenses and you figure out how to make the payments, and now you're spending all of your money because you look like a doctor, you look the part, but you have no wealth to show for it. You have no savings, and you have no investments, let alone knowing where to invest. And this is where it doesn't matter how much money you make. You could get a raise and now make $400,000 a year. All of a sudden, as you start to make more money, you drive a nicer car, maybe you upgrade your house, maybe buy some extra things, maybe go on an extra vacation. That money just gets spent because that mental discipline of knowing what to do with your money is not there. And that's the important part that you have to understand. You're not going to learn this in medical school. You're not going to learn this in law school. You're not even going to learn this in business school. But you have to know how to use that money that you're earning, because you can make as much money as you want, but if you don't know how to control it, it is going to leave faster than it came in. Now, for those of you that are investors and want to become investors, a reminder that my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, housing, stocks, crypto, and global markets into a fun, witty, and easy-to-read newsletter. It's read by hundreds of thousands of investors every morning. And when you join Market Briefs, you'll also get my investing masterclass as a bonus, where I'll walk you through how you can start investing and find big investment opportunities before everybody else. If you want to join Market Briefs and get my investing masterclass all for free, all you have to do is click the link down in the description below. But then what happens to many other people is they say, okay, you know what? I'm not going to fall into this trap. I'm going to make a lot of money, pay my taxes, and then I'm gonna live off of as little money as possible. This is what I'm gonna call the traditional Indian lifestyle, where you work to make $1 so you can spend 20 cents. This is how I grew up, this is what I learned, and this is what I did for a long time. Now, it's not a bad thing, it's definitely not as bad as this, but you can do a lot better. Here's what happens now. You're making $230,000 a year, and you are going to live, let's call it $70,000 a year. That's it. And now you were going to take the difference, that $150,000 that you did not spend, and you are going to dump it into your savings account and just keep piling up that cash pile. Now, having this money in the bank is much better than not having money in the bank. But there's also a problem that happens here. The average interest rate on a savings account in America at the time of me recording this video is 0.6%, while the average inflation rate right now at the time of me recording this video is 2.4%. So now let's do some basic math. Let's assume that a cart of your basic groceries today costs $100. But instead of going out and spending that money, you take that $100, you go to the bank and you deposit this $100 in your savings account. So instead of spending the $100 at the grocery store, you save that $100. What happens after 1 year? Well, if the average savings rate is 2.4%, that would mean that that same cart of groceries with the exact same stuff is going to cost you not $100, but now $102.40, assuming that we believe the reported inflation numbers, but that $100 that you saved in the bank is also going to grow. And the average interest rate on a savings account is 0.6%, which means your savings would grow to $100.60, which means $100 in your bank account grew, but it didn't grow as fast as the prices of things that you need. Your savings are effectively making you poorer each and every day because your savings aren't growing fast enough to keep up with inflation. Now you might say, well, Jaspreet, what if I put my money into a high yield savings account? Well, now I'm beating this inflation rate. Sure, you're beating the reported inflation rate, but you're not seeing any growth in principle. Not to mention that the prices of many things are actually growing faster than the average inflation rate. Because remember, the average inflation rate of 2.4% is the average of many things. And you have certain items, for example, many grocery items, for example, your housing costs, for example, your car insurance costs, which are growing significantly faster than the average. So yes, the average inflation rate might be reported at 2.4%, but the inflation rate for the things that you need could potentially be more than the high yield savings account, which means, yeah, your money is growing faster in the high yield savings account, but it's not actually making you money. And if you want to make money, you have to become an investor. And the nice thing about becoming an investor is not only that you can make a little bit more money, but now you have a new stream of income that can come in without you having to go to work. And not just that, when you are an investor, you can also qualify for bigger tax breaks. But here's the difficult part. This requires you to learn a whole new field of education. You go to school to become a doctor, you learn medicine. You go to school to study law, you become an attorney. You go to school to study business, you become an accountant, you become an investment banker, you become a finance person. All of that is good, but none of that is your personal financial education. And this is something that you have to go out to learn. Now again, it's more work, more time, which requires some risk. But if you don't do this, you're going to stay stuck where you are. And this is that difficult part in our education system that we're never taught. We're taught how to become a good employee. We're taught how to become a salary earner. Nothing wrong with that, but in our education system, you have to become an asset owner. Look at the wealthiest people in the world. Look at Warren Buffett. Look at Bill Gates. What do these people do? They didn't get there because they worked up the corporate ladder. They got there because they own assets. Now sure, many of these people have started businesses. You don't have to go out and start a business. You can just go out and buy those businesses. And if you're earning money, now you got to take the salary from your labor and turn this labor money into capital money to win in a capitalist system. Now a lot of people get angry, they get emotional talking about a capitalist system. I don't care which side of the political coin you're on, I want you to understand the game because these are things I was never taught. I grew up in a traditional Indian house. My parents wanted me to be a doctor so bad that when I was in middle school, I got a tutor for the MCAT, which is the test you take towards the end of your college career to get into medical school. And when I realized that this financial education world existed, I decided not to go to medical school. And then my parents essentially said, Jaspreet, if you want to keep any pride in the family, you have to at least become an attorney. So I became an attorney. But I never worked a day as an attorney because I continued to learn this game, the financial education game. I started investing young and I started learning this. And that's what I'm trying to emphasize here. You have to understand that in this economy, the way you build wealth is by owning assets. You can earn however much money you want. I don't care what your degree is. I don't care what your job is. I'm not saying it's a bad thing. You worked very hard for it and you should be proud of what job that you have. You should be proud of what accomplishments you have. There's nothing here to downgrade that. But if you really want to amplify your financial life, you have to also now layer in the financial education. That way you can use your salary to build your wealth and then have all the nice stuff that you want, but also have the assets there to pay for it. That way now you don't have to keep working to pay your bills. You own the investments that can pay your bills for you. It's a lot more freedom, and now what you're doing is you're working to make money to buy investments. You're not working to make money to pay your bills. But the only way you can get there is if you change the way you look at how money works. And when you understand that, now you can start building a financial education and start working like a wealthy person instead of working just to make everybody else rich. Again, if you want some more resources, you can check out Market Briefs and my free investing masterclass. I got that link for you down in the description.
I would love for you to share first, how do you think that institutions profit from our financial uneducation?
Well, I think the system, our economic system, is designed to keep the majority of people poor. After learning about how money works, you start to see why certain things work the way that they do. And I'll explain exactly what I mean.